You're watching Stock Watch. I'm Zinati Guma, and joining me to unpack your stock-related questions today are Ricus Reeders from PSG Hole Ruimsig and Zwelakhe Mnguni from Benguela Fund Managers. Be sure to send your questions through via email to stockwatch@bdtv.co.za, via SMS on 41392 or on X @BusinessDayTV using the hashtag StockWatch. Thank you so much for your time, gents. At first, I thought that there was something that was technically wrong on the JSE today because the resources didn't move. Like, I don't know, they ended off flat, like 0, 0, 0. Like, Ricus, were my eyes seeing right? What was happening there?
Well, no, 0.16% down on my screen.
Oh,
So maybe it's a dollar source on your side, but basically on the resource sector, golds were up, platinums were down, and the rest were basically unchanged. So the interplay between those two components of the resource sector gave you the move.
Well, it's been quite interesting trading because they're the ones that have actually been lifting up the JSE, trading at almost record highs. Zwelakhe, I'm wondering because, of course, we're seeing all this buoyancy coming from the gold counters and you have all this diversity on the JSE. But has SA Inc. actually participated in this rally that we've been seeing on the JSE?
Yeah, look, I think we probably need to see a bit more evidence on the earnings for us to see the full benefit of the optimism that we saw late last year when GNU was announced and early this year. So our market's up quite a lot, probably in 1 year, over 20%. And I think the market is basically gauging to see if we're going to get the earnings coming through. There is a bit of a wobbly path towards those earnings.
Well, as the JSE is trading at record highs, the S&P 500 has not done so in a while. Even today, there is some pressure. And there's a viewer that is asking, is the S&P 500 a good buy? Ricus, would this be a good opportunity, or maybe thinking of it that it is down for a reason?
Historically, it's not a good buy at the moment because it's so heavily weighted towards, what we call the Mag 7 or Mag 10 counters. And the move in those shares, if they do go down, is going to, just as it skewed the S&P 500 to the upside versus world markets, it can skew it to the downside if those specific big capitalization counters take a knock, which they can very well do.
Yeah.
Because I think there is evidence that traders are moving away from the US tech sector in general and more specifically possibly towards Chinese tech.
Yeah. So assuming that Ricus is a little bit cautious at this point, what would your approach be on the S&P 500, Zwelakhe?
I'd probably be cautious about the large cap tech stocks, but on balance, I think you'd likely see that the decline in the tech sector, if it does come through, it would be offset to some extent by the cheap non-tech sector performance. So I think there's a big valuation disparity between the two sectors just within the US. So it's a very difficult one. I'll probably maintain a neutral exposure to the US. I wouldn't go underweight the US at this stage. I mean, there's a lot of moving parts around the tariffs, and the US is the instigator in this whole situation. And you would want to be on the side where they basically play. Long term, I might be more inclined to emerging markets and Asia.
All right. Well, gents, let's come back home and take a look at Woolworths. Retail sector being quite an interesting one, of course, looking at better fundamentals when you look at things that should be influencing consumer behavior, inflation, interest rates, although it hasn't really filtered through significantly to the consumer pocket. What is the reason for Woolworths' recent downturn, and how long do you think it will take to recover and reach over 60 Rand again? Ricus, Woolworths, I think maybe it has been quite well documented, the fundamentals of their struggling clothing business, but seeming that business is being lifted up by the food division.
Yeah, I think you're quite on point there. It's not something new that as a company, they've operationally been underperforming other companies in that sector because of this weird thing between clothing and their food business. They've been promising for a very long time to get their clothing business reorganized. That hasn't happened, and latest set of results, it still hasn't happened despite promises, and that's why it's underperforming the sector. And I see no reason to be in it until such time as there's really evidence of turning that side of their business around. And their food division is also under pressure. I mean, Shoprite's taking market share. So I don't really have a good reason to be interested in Woolies.
Yeah, well, a lot of investors have been letting go of their shares. So the second part is, would you advise to hold or sell to avoid a loss at this point, Zwelakhe? Yeah, hold maybe in the hopes that clothing division is going to make a turnaround, and maybe the momentum on the food side is going to continue, or sell because you're not really seeing a light at the end of the tunnel anytime soon.
I'll be very cautious about Woolworths. I think the clothing business continues to underperform, and all along it was the SA side, and then it was Australia. Now it's both. I think that we probably need to be super cautious. I wouldn't buy it at this level. I'd want to see a change in management to some extent. I think either the change in management or the disposal of the clothing business. I think it's a very difficult business to run as a sideshow. I mean, we've seen the big players in the clothing sector. They've also taken a beating, Mr. Price, Foschini, everybody's taking a beating. But because they are specialists in the area, they come up with strategies that can help their divisions. In Woolworths, I cannot see the way out of this situation, and it's been a perennial underperformer. So I'd wait to see evidence that there is a real genuine change in the strategy of the business.
Well, I mean, what about clothing retail in general? Zwelakhe talks about the others being specialists in their field. We even had an exchange of businesses between Pepco and Retailability, which owns Edgar's actually having made its own turnaround. Ricus, would there be any interest in that clothing retail space?
Yeah, my preferred counter is Pepco. That whole sector, as Zwelakhe said, has pulled back, probably about 10-15% on average. So if, coming back to the Woolworths question, do I sell it? I would suggest yes, and possibly at these levels take a look at something like Pepco or even something like Mr. Price.
Yeah, quite interesting, because I'm actually talking to the CEO of Retailability tomorrow and the CEO of TFG on the growth of Bash. Would you take a bash at the clothing sector, Zwelakhe?
Yeah, I'd probably be more constructive on both Mr. Price and probably a bit of Foschini, but okay. I would be cautious around the others. I mean, we do need to see evidence of them turning around. Pepco is a good business, and it's got a little overhang above it, but I don't think that operationally it's a business that's at risk. So I would also say maybe that's a counter to play on.
All right. Before we go to the break, I want to go back to the resources index, Glencore there. Any reason why it is on a slippery slope where most other commodity counters are sharing in the recent commodity run? Okay, yeah. Ricus?
Yeah, I don't have a definite reason. Obviously, there's, they are a copper miner, and we know that there's copper tariffs coming in, so that's going to be a problem for them. They've also downscaled their coal operations, so there is a bit of pressure on that side. I don't think your general miners, the Rio Tintos, Billitons, Anglos, have really done all that well. It's been more sort of single commodity stocks, specifically precious metals. But yeah, as far as future growth is concerned, it still is going to come from copper. At the moment, the market sorts itself out as far as the American tariff situation is concerned, because copper in itself is still a growth story because of its use in, well, everywhere.
And that's actually the thing. I hadn't thought about the impact of tariffs on copper because copper has really been the place to be for miners right now. What would your feeling on Glencore be, Zwelakhe? I mean, one of the well-loved diversified miners.
It is a diversified miner that I think, as Ricus said, I mean, the copper assets are decent and they've got a marketing business that tends to cushion them through the difficult times. I think that overall, I mean, I'd be favorable to Glencore. There are ongoing issues around. I mean, I read somewhere that the emissions were understated. They've just reduced or closed the operation in the copper in the coal space. But it is a business that can weather the storm better than others, and I'd probably be more inclined to buy it than sell it.
All right, gents, we're all trying to win the jackpot here. And here's a question that I feel like the viewer is trying to win the jackpot here. And I'm not sure if this is possible, but we can give it a bash. Will the expert panel select one share on the JSE to buy and hold for the next 4 years? One share. Zwelakhe.
I'd probably go with Naspers. I think the underlying asset of Tencent and the e-commerce businesses seem to have turned around. I think we are seeing only a pickup in momentum in the AI assets in Asia, particularly China. I think that could give them a bit of either retention on their social media platforms, or they would be able to monetize advertising better, and that is Tencent. So that should feed through into the valuation of Naspers and Process. So I'd probably pick that as my long-term safe stock. I mean, there'll be volatility along the way, but I'd pick Naspers.
Yeah. Ricus, a stock that you're willing to buy and just close your eyes for 4 years?
It depends if you want to concentrate on SA Inc., in other words, companies which operate in the local space, or whether you're going to buy something that's just listed here and have their operations overseas. If it's local, it's probably Bidvest.
Okay.
We all know the story about Bidvest. I think it's possibly one of the best run companies in this country, considering the environment they've got to operate in. They're not going to make, it's not a dripping roast or you're going to make millions out of it, but it's as far as quality is concerned, I don't think you can go wrong there. Offshore Richmond, just because you can buy it over here. I still think it's that luxury side of the market is still pretty defensive in trying times, and compared to their competitors, it's not at an expensive valuation. It's not the best overseas stock you can buy, but because it's locally listed, I'll probably go for that.
All right. Well, as we're talking about offshore, there is a question on an ETF, the Euro Stoxx 50. Is it a buy? Zwelakhe?
Yeah. Look, Europe is relatively cheap, and I say relatively, relative to the US.
Okay.
I think I mean, on balance of probability, I'd buy Euro Stoxx 50 index before I buy the S&P 500
Okay.
index. If I had to select stocks, I mean, there'd probably be some good stocks within that Euro 50, but it is dominated by financial sector. So one has to keep that at the back of their minds as we move towards lower interest rates for the banking
Okay.
sector. That would have a slightly negative impact unless growth comes through.
All right. Your thoughts on the Euro Stoxx 50, Ricus?
Yeah, I like what Zwelakhe said. You know, it's a relative play. So
Yeah.
relative to its American counterpart, it's possibly undervalued. So to me, it is a safer bet. Obviously, um, considering the defense and infrastructure spending that's now coming through in Europe or possibly coming through, that could change the growth avenue of European economies in general from really poor to maybe not so poor. And then also the that Stoxx 50 heavily financially weighted, but also companies that just happen to be listed in Europe but have operations worldwide. So I don't think it's a bad bet. If you're really looking for growth, go and take a look in Southeast Asia, whether it be Vietnam or South Korea or one of those countries.
All right. Well, gents, let's take a look at African Rainbow Capital Investments. The delisting, is this offer of R9.75 a final offer, or there's a possibility of it being revised? Zwelakhe, yeah, and I guess if you think it is a good offer.
As I said a few weeks ago, I don't think it's a good offer. They need to offer shareholders a decent valuation, and I think amongst those issues that I personally had with the
Yeah.
stock was the valuation on Rain. I felt it was always inflated to some extent. It was valued at a high multiple. I also think that the management fees that they were charging were extracting a lot of profit out of the business. And I think it is time for them to stand behind the valuation and essentially give shareholders something that they've always believed in. So I wouldn't sign up for this valuation. At least I'd hold out.
Well, the second part of that question is it advisable to wait, or can one already sell now, seeing that the price is not far off from the proposed offer? R9.40 versus R9.75. Ricus?
Yeah, I don't know. Can you use your money better elsewhere? Do you want to sit through this bun fight that's going to happen? The discrepancy between what I think a majority of non-management shareholders are saying about the offer price and what management is saying about the offer price. If it was me, I would say I can probably go and use my money better someplace else rather than sit on the sidelines while there's uncertainty surrounding the whole story. It's
Interesting.
time value of money. Go
Yes.
and go somewhere where your company's actually doing something rather than just paying a bunch of consultants to get delisted.
Interesting. All right, let's get into property on the lower end. Calgro M3, is it a good buy? I don't know if this is one that you look at, gents, but we have seen from their results over the last few periods actually looking quite good. Zwelakhe?
Yeah, I mean, I haven't looked at this business in a long time, but they do low-cost housing and the memorial parks. I mean, it's generally a business that has had quite hefty working capital, so it hasn't looked good from a working capital point of view, cash flow point of view. But if one looked at the need for low-cost housing, the need for memorial parks, I think from a strategic perspective, it does look good, but I don't know if it's a stock that one could buy and relax. I mean, you could get into serious liquidity problems at any given point in time.
Yeah. Ricus, is this one on your radar on any level?
I think, first of all, local property stocks at the moment are pulling back because interest rates maybe not going down as fast as
Okay.
people want that to happen. It's done great over the past, I don't know, over the past 2 years, basically outperformed growth point, if you want to
Okay.
use that as your standard. There's been a turnaround in the business. The memorial parks are doing well. And as Zwelakhe said, there's always been capital intensive. I think that there was a problem with turnover in that, which they also solved. Don't
Yes.
follow the company all that closely, but yeah, I know financially they're certainly on a better footing than they were a year, 2 years ago. But I'd rather go and read up some more before
Yeah.
actually having an opinion on
Yeah,
that.
and they've definitely done some things to advance the business and profits. For example, now you can lay by a site
That's
at a
right.
memorial park.
Yeah.
So very, very interesting take on that. Gents, let us get to your stock picks for today. Zwelakhe, what are you choosing?
I'm going with Netflix, and for two reasons. I mean, I know that the valuation multiple doesn't suggest a dip in roast, but I think if one looks at the fact that they've scaled up the content business, which has often been the element that has collapsed many media companies, the creation of content. And they've been feeding this massive machine of 300 million subscribers. And they're at a point where they've achieved economies of scale on that content, and they may now use things like monetization of advertising that can help them to offer more attractive subscription bouquets. And I do think that there is quite a decent potential for them to drive advertising growth to a point where they could unwind that P multiple of about 37 times forward quite quickly. So that would be my preference. I mean, they're going global, and their global growth strategy has done well over the last 5-6 years, and they seem to be gaining more countries or getting to more countries here.
All right. Well, yeah, what is on your watch list, Ricus?
Still hugely defensive, so it's Procter and Gamble. Look, it's been trading in a price range between $160 and $180 for a while now. They're sort of midpoint there. So I think our fair value is about $180. That's also a technical target. So I just want to play it safe. It's sitting on a div yield about double what you'll get in the Russell or the S&P 500. It's a dividend aristocrat. It's grown its dividends for more than 25 years in a row.
Wow.
It's very stable in a volatile environment. It's got huge pricing power. It makes all of its products in the US, so tariffs won't really affect it. So it's purely defensive, and just, I think, some players to park your money relatively safe in this very uncertain economic world that we're finding ourselves in.
All right. Well, thank you so much for your time and for your analysis today, gents. Really appreciate it. That is all for tonight's Stock Watch. Thanks to our guests, Ricus Reeders from PSG Hole Ruimsig and Zwelakhe Mnguni from Benguela Global Fund Managers. Up next, the close. Stay watching.